All right, what's going on, guys? John Phibb here. Today is August 18th, and it is a Friday market review. This is going to be free for everybody to watch, so you can kind of get a taste of what the memberships get. Tier 3 members get access to the Discord, as well as 2 market reviews per week. The Tier 2 members also get 2 market reviews per week, but the Tier 3 is where you get the Discord. Okay, but anyways, I would like to discuss the indices with you today. And of course, we should start with the top-down analysis, which is what we're going to do here on the daily time frame. But right before we get to that, there's just a couple of shout outs and announcements I need to do real quick. First up is a huge shout out to Ali, who just got funded by Top Step August 17th. That was yesterday on Thursday, since today's Friday. So huge shout out to Ali for becoming a Top Step funded trader. The second update is, as of today on this particular channel, we now have 6,000 subscribers, achieved August 18th, 2023. So thank you guys so much for subscribing. I appreciate it. The views, the likes, and all of that. Thank you guys so much. And the last thing is, today is Mia's birthday. So Mia, happy birthday. I hope it's a good one. I hope you have a great weekend and all of that. So like I said, S&P 500 or even the other indices will start on the daily time frame. So you can see that Monday was an up day. Tuesday, Wednesday, and Thursday were all down days. So what can we expect Friday to be? Possibly an up close day. Now, it doesn't have to be that way. It might even be a down close, barely an up close. But the point is, if we can go into Friday with the bias that it may be an up day, we can look for potential longs if there is something that's high probability. Now, if we look over to the left, there's going to be an important low that we can mark right there at 43.68.5. That's going to be the low of Monday, June 26th. So what we can do now is drop down into a smaller time frame and take a look. All right, so what we've done is drop down into a 5-minute time frame for the S&P 500, and we'll take a look at what transpired today. So what's going to be important is that 43.68.5 level, again annotated with that pink line. That's how I always measure levels of liquidity. Now, if you want to thicken the line to represent higher time frame, you can, or if you want to label it higher time frame liquidity, you can. But either way it goes, what took place during London was a downtrend essentially. So we ask ourselves, who is in open profit? Anyone who has been short during London, or even late London, pre-market New York, we have, or New York Stock Exchange rather, okay, then we have buy stops that are going to be resting above previous highs. So we know that there's a chance of high probability chance that there's going to be liquidity above some highs. Now, I don't just go in here and long. I look for the low to be set and then look for retracements. So we can easily see the market again drop down below that low. Our stock exchange open is here at 8:30. We rally, so we break structure here, then we trade down. We can see that this down candle here, or even that last series of down candles, price comes into that, respects it, we trade higher, we come down again. So if order flow is bullish, down candles should be respected. We do see that here. Market trades above that 43.68.5 level, comes down again. If order flow is bullish, down candles should be respected or seen as support. Do we see that? Yes. Then the market rallies into lunch. Okay, now this is where things get interesting. The afternoon session, or also known as the PM session. I'm not the greatest trader in the morning. I'm much better when it comes to the indices in the afternoon. I don't know why it's that way. It's always been that way, and I don't fight the data. The data tells me what it is. Okay, so if we mark the the afternoon, there is 12 p.m. Central. Okay, is the afternoon session for me to 3 o'clock, and that's like essentially the PM session of the stock exchange. So what I'm looking for a lot of the times, if I am bullish, then I want to look for a down move first, kind of like this morning. Okay, this morning at the open, we had a down move and then rallied higher. So I want to see price trade lower first if we want to go higher. So a lot of the times we'll see runs on either the lunch low or a morning session low prior to trading higher. It won't be like that every day, but that happens a lot. Now, in the case of the S&P today, we actually created equal lows, but there's some other charts that we can utilize to help either trade the S&P, or we can use the S&P to trade other assets like the Dow or the NASDAQ, which we will take a look at right now. So if we hop over, still on a 5-minute time frame, over into the chart that I have here, this is the chart that I have for relative strength. So we have the S&P 500 on the top, we have the Dow Jones in the middle, and then we have the NASDAQ on the bottom. Now, I usually do a line chart, sometimes the candlesticks, or back and forth, however you want to do it. But either way, what I would like to show you is we have the Dow Jones again here in the middle. It is making a lower low here at the beginning of the afternoon session. If we look at the NASDAQ here, it's making a higher low. So the Dow Jones under manipulation, NASDAQ under accumulation. And so if we look at the NASDAQ by itself, does it have higher time frame targets like the S&P does? Well, yes, because at that particular time that the NASDAQ was under accumulation, it did not trade lower like the Dow Jones did. We do have some previous highs around 14,790 and even 14,780, something like that. But I'm just going to mark the highest high here. So if we zoom in a little bit further, what we're going to take a look at, obviously that level was met. I wasn't actually looking for that. I was just looking for these up here. But either way, what we want to look at and what we want to study is how did we get there? When did we get there? And how did we get there? And that we can find on these smaller time frames. Now, if we come back to the S&P for a second, just for full sake analysis, even though I was watching the NASDAQ this afternoon, again, we can look at the different indices to help confirm one another. We can look for strength or weakness. Now, weakness on the side of Dow, strength on the side of NASDAQ. So if you were wanting to trade the PM session today, in my opinion, it should have been on NASDAQ. We can see that price delivery has changed from bearish to bullish price delivery. How can we tell? Well, look, down candle being supported, down candle gap here being supported, and price trades up into liquidity. So this down candle here can be seen as a long, this down candle here, a gap within that, either here or here, that can be seen as a long up to these highs. The market does retrace, and it does actually launch up to 43.96 at the end of the day. Now, me personally, that's probably not something I would have held. I probably would have got out here and most likely would have break even on the way lower. I just wasn't expecting that at the end of the day, but moves like this here in the afternoon is enough. 8, 9, 10, maybe 12, up to 15 points. That is decent for an afternoon day trade. So again, I want to make the point clear that if we look at NASDAQ, it was under accumulation. We can see that here because it fails to make a lower low, it trades higher. So it makes a higher low instead. And you can see the shift in price delivery. Accumulation, it rallies. Down candle, seen as price support. Down candle here, seen as price support. And then right before the move up to these highs, again, even though it did run up to these highs, I wasn't asking for all that. I was just asking for a little bit. And if we drop down to a 1-minute time frame, we can see lows here, swept, price trades higher, and then back down into this imbalance. Price doesn't trade below this low. That's important. That's important. And then it launches for these highs. So again, this can be seen as a long. This can be seen as a long under the lows. That's a stop, like your stop loss is my entry idea. And then this is like a late order flow idea, scalper's paradise for a movement higher. And with that being said, that is going to be it for today's market review. I hope you guys were able to learn something. Again, if you'd like to join the Smart Money Stoics Discord channel, you can get a tier 3 membership today. If you're a tier 1 or 2 member, you always have the option to upgrade to tier 3. I think you just have to pay the price difference and you'll be able to get into the Discord where we have the community chat. We post charts. We have the lounge voice channel. I post book recommendations. We can do exclusive live streams, more of them in the future, amongst other things. So with that being said, y'all be blessed. Have an amazing weekend. I'll see you guys next week.